India Limited 2Q FY24 earnings conference call hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Gupta, Emkay Global Financial Services. Thank you, and over to you.
Yeah, hi. Good evening, everyone. I would like to welcome the management and thank them for this opportunity. We have with us today Mr. Abhijit Roy, Managing Director and CEO, Mr. Kaushik Ghosh, Vice President and CFO, and Mr. Sujyoti Mukherjee, Vice President, Finance and Accounts. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Good evening, ladies and gentlemen, and festive greetings to all of you. A warm welcome to Berger Paints Q2 FY24 earnings call. And as you all know, we have with us our MD, Mr. Abhijit Roy, and our CFO, Mr. Kaushik Ghosh. Now, before I hand over to Mr. Roy for his comments, followed by your questions, I would like to say that the management presentation on the performance has been uploaded in our website and on the exchanges. Just a standard disclaimer that questions should be restricted to the performance of the quarter. With that, I hand it over to Mr. Roy for his comments.
Thank you, Sujyoti, and a very warm welcome to all of you. And we will be discussing today the Q2 and the half-year result, which we have declared, a few minutes back. As you can see from the chart that we have already sent to all of you, the top line which we registered in Q2 was a bit moderate. We had a growth of about 2.8% on a standalone basis. However, we registered strong growth in the 2 or 3 year compounded basis of 12.2 and 16.7% respectively. In terms of the half year is better. We had a growth of 6.5% on a half-yearly basis in terms of value. And if you look at the 2 year and 3 year CAGR, they are at 20.7 and 29.9% respectively. If we look at the Indian operation, Berger Paints, and in the consolidated, we have 2 companies, STP and Sabu, which operates out in India. If you add up all these 3, the market share that we so far 2 companies have already declared. We are the 3rd, and we have estimated for the 4th. And approximately what we feel is that we would have gained market share to the tune of about 0.7 to 0.8% till half year of this year. So we had closed last year at about 19.3%, and we expect that the market share should be above 20% level at the end of half year of this year. In terms of the volume growth, we registered a volume growth in Q2 of 10.9%. The 2 year CAGR is about 10.6, and a 3 year CAGR is about 14%. On a half-yearly basis, it is at 11.8%. 2 year CAGR is 18%, and 3 year CAGR is 23.7%. Though we maintained double-digit volume growth for the quarter, the value growth was much lower. The extended monsoon resulted in low offtake of exterior and interior premium emulsion, and it was much more of the sale of economy category, economy emulsions, primers, distemper, putty, which was the result of that, that the value sales growth was relatively lower. We also sold much less enamel first quality in this quarter, which is a high ASP product, and therefore the value sales looks little bit lower than normal. So that's the explanation for the volume value differential, though we did have a decent volume growth given the situation which was quite tough. Because the extended monsoon, due to the postponement of the season, it is slightly delayed, and also of course the fact that there was a relatively higher base because of the price increases which had happened last year. So now if you look at standalone profits, we registered decent EBITDA growth of 26.7%. On a half-yearly basis, it is even stronger at 32.5%. There was very strong growth in the gross margin. It is the highest now, in the last few quarters, at around 40%. Operating margin, however, expanded by 310 basis points. The margin expansion was somewhat moderated on a conscious call taken by us to increase ad spend, especially in the digital segment, which we have been working on diligently this year. In terms of the financial results, if you look at, which we have posted there, we did a sale of about 2439.8 crores for the quarter, with a growth of 2.8%, EBITDA growth 26.7%, and PAT growth of 27.9%. On a half-yearly basis, the corresponding figures for revenue growth 6.5%, operating growth 32.5%, and PAT growth of 34.1%. If you look at the decorative business growth, even though muted, was better than the industry average. Lower growth, as I had mentioned already, was on account of extended and sporadic monsoon, festive season which has been delayed, and some impact of a high base effect. Decorative business improved as the quarter progressed from July to August to September. Construction, chemical and waterproofing business had another quarter of very strong stellar performance. Aggressive network expansion also helped to some extent and is going to help us further in the future. We added 2,000 plus retail touchpoints in quarter 2 of this year and installed 1,700 plus color bank machines in this quarter. Some initiatives which we took on the digital side, some very interesting work is going on. One of them is we introduced one app, which is the Berger My Color app, AI-driven, very interesting app which has had very strong downloads already. Companies also working with Salesforce for increasing the efficiency in lead generation and better customer management. And express painting service, which was there earlier, in all the major towns, is now being extended across many more smaller towns and upcountry markets, and we expect very quick result in this as well. As far as products are concerned, we have introduced some interesting products in the last quarter itself. Glamour Dazzle, which is doing quite well in the East specifically. Long Life 15 with a 15-year warranty. PU Elastoseal, Anti-Dust, which continues to do well. Easy Clean, which continues to be a leader in its segment. Long Life Flexo, which we have started advertising. Of course, in construction chemical, we have Danstock, which we are being advertising very heavily now, both on the TV and the digital media as well. Even in the cricket matches, we will get to see that. Of course, we also participated, the festivities have just begun with Durga Puja in West Bengal. We have a very interesting program called Berger Priyo Pujo, which we sponsor, and which just got concluded, and we are now on to the Diwali period now. The Diwali season is coming up. So far, it looks quite good as far as the Diwali belt is concerned. Sales has been quite good. Protective coating maintained its steady, consistent growth in the quarter. Automotive and general industrial business had double-digit growth in the quarter, even against a high base in the corresponding quarter, due to the growth in commercial vehicles and two-wheeler industry which has improved from what it was earlier. Powder coating business line showed a turnaround with robust double-digit top-line growth, aided by some uptick in the fan industry. If you recall earlier, this has been a troubling factor in the powder coating business. So now that situation is reversed and therefore we are getting stronger growth. As far as the gross margin is concerned, I had mentioned that it is in the last few quarters the highest at 40%. However, the PBDIT is at 16.5%. We have given an indication that it will hover around the 16 to 17% range, and that is where we are. Deliberate spending on advertisement, especially on the digital media, will continue in the future. As far as consolidated business is concerned, that is actually, it has outperformed the standalone on the back of strong double-digit top-line growth and even stronger profitability growth across all subsidiaries except BJ and Nepal. Nepal has been struggling, as you know. The country is going through an economic downturn, for the past few months, and I don't see that improving immediately. So that Nepal remains, a negative zone, but all other areas are doing very well, all the other subsidiary companies. If you look at the figures, the top line has grown by 3.6% in the consolidated business. EBITDA growth is 30.1% and PAT growth is 33.1% for the quarter. For half year, it is 6.7% top line growth, 34% for the EBITDA growth, and 36.7% for PAT growth. Company's overseas subsidiary, Bolix Poland, had another quarter of strong top line and profitability growth driven by good performance in the UK business. Company expects to show good growth in quarter 3 as well. Company's overseas subsidiary, BJ in Nepal, had another quarter of degrowth in top line, as I mentioned earlier, as the slowdown in the construction sector continued in an inflationary environment. However, it recorded modest profitability growth, aided by gross margin expansion on the back of improved RM prices. Growth likely to remain negative in quarter 3 as well. Company's subsidiary SPP showed healthy double-digit top-line growth. It also recorded very strong profitability growth and operating margin expansion, aided by improvement in gross margin due to softening raw material prices and substantial improvement in product mix. We expect double-digit value growth to continue in quarter 3 financial year 24. SBL, which is the Sabu Coatings, had a strong double-digit top-line growth and a robust profitability growth, aided by higher product realization and softening RM prices. We expect double-digit value growth to continue in quarter 3 of financial year 24. The joint venture, Berger Becker Coatings, which doesn't get consolidated in terms of sales, etc., experienced a decline in both its revenue and profitability, primarily this is attributed to the capacity limitations resulting from a fire incident which happened, as you know, in one of our the main manufacturing facility in Goa in the fourth quarter of financial year 23. That is being restored, and we should see back to normal work there in quarter 1 of financial year next year. Company's joint venture, Berger Nippon Paint Automotive Coatings, had another very strong quarter of robust top-line growth and profitability growth, aided by uptick in passenger car and SUV sector, and we expect the strong growth to continue in quarter 3 of financial year 24 as well. As far as capacity expansion is concerned, work at the new plant in Panagar will start in the next 6 months in West Bengal for industrial paints and construction chemicals, with a capacity of about 3,500 KL per metric ton per month. Expected completion is by end of 2025 or beginning of 26 maybe. Further greenfield facility to come up near Bhubaneswar in the state of Odisha for manufacturing of both decorative and industrial paints. We have just been allocated land. Expected completion by end of 2027. Some brownfield expansion in existing facilities in Vallabh Vidyanagar, Hindupur, and Visra to be completed in financial year 25. Company expects improvement in decorative demand in Q3 on the back of extended festive season and improvement in rural demand aided by a normal monsoon. Automotive business expected to continue with double-digit growth in quarter 3 on the back of sustained demand. Protective coating business to do well on account of high government spending on infrastructure. Indian industrial and powder coating business to show strong double-digit growth in quarter 3 of financial year 24 again. We maintain double-digit growth outlook for quarter 3. Profitability expected to sustain in quarter 3 on moderation of raw material prices. However, impact of geopolitical situation on commodity prices can be a concern. And thank you. And now I can get to the question answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question we have from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks. Congrats on double-digit volume growth in standalone and 10-quarter high gross margins. My question is on the 20% plus market share. So if you could tell us in this very competitive industry, what are the 2-3 steps, main steps which are driving this? And second is 10-quarter high gross margins in a quarter where the emulsions, both exterior and interior, are low, which are the higher margin. Plus, you did say that lower end grew faster. So how come the margins are higher than Q1 and Q4 also? Because broadly, last 2-3 quarters, raw materials are in a tight range. Yeah.
Right. So the 20% market share first, primarily 3 areas of, which we are looking at, which is helping us. Number one is in terms of distribution expansion, the network expansion itself. As you saw the figures, it was quite strong and it has been going on for some time now. Expansion of network is one of the major drivers for us, and I think even now there is a lot more scope to improve on this area because there are a lot of gaps in many states where we can do much better than what we are doing. The second part, of course, is in terms of the construction chemical business, which is growing at a rapid pace, which is helping us to actually accelerate our growth because now it has reached a level which is significant. And growth on that is helping us to helping the overall growth criteria. So, these two major areas which are, definitely helping. Of course, some of the new products are doing well. In certain pockets of the country, it has picked up momentum quite a lot. And therefore, that is also adding to the overall gain in market share. Now coming to your second question, which is a very relevant one, that how come that even though the luxury emulsion sales as a premium category sales has been a bit muted, how have we delivered on the gross margin? There are 2 or 3 reasons for it. One, of course, is that the raw material prices has reduced, and the benefit of it is coming to us a bit late. I had mentioned in the last quarter also that the full benefit had not come in the previous quarter to us because we were carrying a bit more inventory, and that is old inventory at the old prices, which is helping us. The second is in terms of the low sale of enamel. Enamels are typically a very low margin product. As I mentioned in my comments, this time enamel sales have been considerably muted, which is why the value sales actually did not rise to the extent of the volume growth, but it has a very low margin. In fact, enamel whites are negative in terms of profitability, and therefore the gross margin tends to move up when enamel sales are on the lower side. And the third reason is some of the products, as I mentioned, some new products are doing very well. Two of them, which is Weathercoat Long Life 15 and Glamour Dazzle, Silk Glamour Dazzle, these are very highly profitable and they are growing at a very rapid pace in certain markets, especially in the East, which has helped us to shore up the margin.
Sure, understood, Abhijit. Very helpful. My second question is on the competitive intensity, and this is not from the market leader. My question is, last 2 years, a lot of few cement players have acquired small paint companies. So any ramp up till now? Second is in FMCG, 5-6 categories, we have seen local players become more aggressive on advertising spends and promotions. In paint industry also, the gross margins for the entire industry is at a 2 to 3 years high. So in terms of local players, and you said lower end is going faster. So if you could tell us, in your key markets, the local competition, is it higher versus, say, last 2 years average? And what are you doing in terms of being proactive? And the cement companies which have already come. I'm not referring to the big daddy which will enter in Q4. I'm referring to Astras of the world and some of the paint companies which have acquired small paint companies, the cement companies which have acquired.
Right. No, so as far as the cement companies or other building material companies which have jumped in, we haven't seen, much of an impact so far. Maybe it may have an impact later on, but as of now, it hasn't impacted us. Some of these companies that you mentioned, like Astral, which they acquired Gem, their main market is in Karnataka. We are not a very strong player in Karnataka. So I won't be able to comment, but it hasn't impacted us in any which way, in any of the markets where we operate, or we have a stronger presence. The second part of the question which you asked is related to the unorganized players and how are they doing. So in certain parts they have revived, especially in certain products like primers, water thinnable primers or solvent thinnable primers, which is in the lower end of the spectrum. There is some amount of revival from these local players. But at the same time, we have got competitive products now in this price range, both in the emulsion category and also even in the primers. So though they may have revived and some gain might come to them from other companies, as far as Berger is concerned, we have remained more or less unaffected so far by this unorganized segment.
Sure, understood. Last quick question, which is a bit negative in terms of numbers. So if I see volume growth versus the value growth, there is an 8% difference. And here you have mentioned that economy segments grew faster. So what is your take on economy segments growth in H2? Because generally what we are picking up, rural slowdown is still continuing. But you have mentioned that in H2, because of whatever reasons, you expect that rural should recover. Second reason seems more of a Q2 only, because that was linked to the monsoon, the emulsions not selling well. So in Q3, when the emulsions issue will not be there, would you expect that the 8% gap will be a much lower gap, say, insignificant kind of a gap between value and volume?
Yes, so in short, the volume value gap will get much reduced in Q3, and it will be very clear when the results come out. Definitely not at these levels, because luxury category tends to sell much more in Q3 and Q4 as well. So therefore, the gap which you are seeing, also the enamel bases are not that strong in Q3 or Q4. So therefore, you will tend to see a much closer volume value equation. So the growth rate or value growth rate will go up, even though the volume growth rate may not climb so much.
So thanks. That's all from me. Thanks a lot.
Thank you. The next question is from Avi Mehta from Macquarie. Please go ahead.
Hi, sir. Thanks for the opportunity and congrats on the performance. Sir, I just wanted to build up on the last question asked by Abneesh. If we are seeing a mix improvement that would pan out, would it be rational to also argue that it would flow through to gross margin as well?
So as I explained, it is difficult to say like that. I don't think there will be too much of an impact on the gross margin because there are two things which will happen. One is that there will be an improvement in the mix, which is for sure. That but at the same time, the enamel which had decreased quite a lot, corresponding figure, if you look at, it was not doing well, will do slightly better in this quarter. And overall, therefore, I don't see the margin, increasing too much. It will be hovering around the same point. Of course, the raw material prices also is impacted a little bit because of the climb in the oil prices to some extent. There were two increases which were announced, in the oil prices, earlier in the MPO prices. So the raw material prices had gone up. Luckily, it has been reduced again day before yesterday, to some extent again giving relief. But there is still an increase which has happened from what it was earlier. The second is in terms of we have a fairly substantial basket of imported items and rupee has depreciated somewhat from earlier levels. So that will also impact negatively. So I think overall the margins will be at similar levels to what we were at in Q3 in gross margin terms.
Got it, sir. Got it. Fairly clear. So thank you very much for that. Sir, the second bit was on the subsidiaries. Now, from your comments, it did suggest that the performance was more of a mix improvement and there's genuine recovery. But the profitability pickup has been much starker and very healthy. Would it be fair to say this is something that will continue because maybe the mix of STP doing well has improved the way I should look at the difference between standalone and console, or is there anything that is more one-off? I'm just trying to understand how I should look at this quarter from a template point of view. Is this what I should kind of build in going forward or what? So, thank you.
So Indian subsidiaries, it's sort of, going to remain, I think. The improvement that you see is likely to continue. The STP, there is a mixed change which is happening in the positive direction. They were more into the bituminous category, but now much more into admixtures and, more waterproofing products and repair products, which are much more profitable. And therefore, that is going to continue. So the margin improvement will remain as far as STP is concerned. It may not improve from here on by, huge amounts, but it is likely to remain at these elevated levels. And marginal improvements from here will happen. As far as Sabu coatings is concerned, industrial raw material prices have decreased, and that has helped, it to restore it back itself to the earlier higher profit margin levels. And if the raw material prices remain at this level, it is likely to behave in a similar fashion.
Got it, sir. Perfect. And even for the international, sir, Nepal.
In the international, Nepal, the value growth itself it's negative this quarter also. I don't see this improving, the way things I'm hearing from the team there. I don't think it's going to improve much. So it's going to remain muted. And as a result, margins are there, which is fairly decent, but it will not improve for sure because, when such a situation arises, people tend to reject and try to get sales. So I don't think, margins are going to improve there. As far as, the international operation of Bolix is concerned, that will have a margin which will be similar to what we had in Q2. But the sales will be a little bit muted than what we were having in Q2.
Perfectly. Very clear, sir. And sir, just the last bit from a bookkeeping question. We have now been aggressively adding capacities. Is there any capex plan or number that you could share with us, which we could kind of build in for the next few years? Or is this something that is not very material, these brownfield expansions?
So CapEx plan is not very heavy in the immediate future. One is the brownfield expansion, which is well within whatever cash we are generating. It will take care of both the Panagar and the brownfield expansion. So that's very easily done, and I don't see that impacting us in any which way. As far as the Odisha plant is concerned, that work will begin year after next. So at that point of time, it will be better. I will be in a better place to tell you how much of investment is there. As of now, it's a little bit nebulous.
Got it, sir. Perfect, sir. That's all from my side. Thank you very much, sir.
Thank you. The next question is from the line of Aniruddha Joshi from ISEC. Please go ahead.
So thanks for the opportunity. So just one question. We had tie-up with the Ultratech to sell paints through its certain cement dealers. So what was the revenue collected as % of total sales from these outlets? And any outlook on in a way these kind of sales now? Also, how do you see the competitive pressure building? Means from your internal assessment, in which regions we are seeing the maximum impact of the competitive pressure? So these are the two questions. Yeah, thanks.
Right. So, as far as the Ultratech association was concerned, we had a relationship with them under the UVA store concept, where we were the paint partner for them. We were working jointly in many of these accounts. It was a very small turnover, minuscule in terms of contribution. And those dealers where we had sales, we have gone direct with them, and we are doing business. So we don't see any major impact as far as, or even moderate impact or significant impact or any type of impact which is material as far as this part of the business is concerned. As far as competitive intensity is concerned, it remains quite strong even today. Everywhere, the skirmishes are always on. But some of the markets are doing a little bit, is not performing for the last 1-2 months. One of them is Kerala, and I don't know why and what is going on there. But Kerala seems to be slightly down. It's definitely not competitive intensity which is picked up, but the market itself seems to be, on the downturn.
Okay. Thanks for that. I mean to say, basically, Ultratech, means Grasim probably through Ultratech, it has introduced multiple products, including the waterproofing and distemper. Plus, I guess some basic paints are also, cement paints are also introduced through Ultratech. So, do you see, so in a way, there is already some entry done by Grasim into the paint business or paint market itself. So any feedback or any impact on Berger because of that you see, or any maybe color on that competitive angle, if you can share anything? Yeah, thank you.
Actually, Ultratech, through their Birla White has been on this for quite some time. In fact, they have introduced this primer type of a product, in which even JK Cement had done earlier, which is a cement-based primer which they tried to push. Then they came with a primer itself, but it hasn't, worked so far because of the incomplete range and piecemeal approach. It doesn't help. They have been selling primarily putty in the counters and not much of these other items that you spoke about. So it hasn't impacted so far. The Birla Paint, group of course has introduced one product which is wood coatings in some of the markets, but it's too early to say anything about it because not much has happened on the ground so far. Hello?
Thank you very much.
Yeah, thank you, sir. That's very helpful. Thank you.
The next question is from the line of Sirish Pardeshi from Centrum Broking. Please go ahead.
Hi, good evening, Abhijit. Thanks for the opportunity and congratulations for a good set of margins. I just vouch one hypothetical question. Though there are a lot of news around competition and all, to my understanding, paint is a low consumer involvement category. In that, the intermediary plays a lot of role, and that's why I wanted to understand, because about 2 to 3 quarters before you mentioned and highlighted that there is a strong process and there are a lot of recruitment which is happening on the project business. So could you talk something about the project business, how it is shaping up and what is it that we are trying to develop? And second, in last 30, 40 days, how the demand has shaped up, because to my understanding, the sporadic rains has spoiled the first half of the quarter too.
Hello.
Yeah.
Yeah. So you have 2 questions which you asked. Hello, there's some disturbance in the background.
Not from my side.
If you don't mind, if you can quickly repeat.
Yeah. So my first question was that about 2-3 quarters before you mentioned about the project business, there is a lot of focus around it.
Yeah.
So
right.
What is the update there? How far that business has reached? And second,
Right.
I asked how that last 30 days has happened, because quarter 2 first half was bad in terms because of rains. So we understand the demand last 15-20 days has picked up and even the inventories has gone up in the system. So maybe on the demand side, how it is shaping up, if you can share.
Right. So as far as the project business is concerned, this has been, we have been at this game for some time now. And since the pickup has happened in terms of the building construction, the project business has been doing reasonably well, and it continues to do well. Of course, it is a very smaller portion of the overall pie, and though it is growing at a slightly higher pace than the retail, it still remains at a low level in terms of the overall sales of the company. As far as the demand situation is concerned, the Diwali belt, as you rightly said, had picked up, substantially in the last, 20-25 days. We had a good October as far as the Diwali belt is concerned. The east was a bit muted because of rainfall, and then the Durga Puja, which fell right in the middle of the month for 4 days. So, a bit muted as far as east is concerned. South also did okay, but except for Kerala, which had some sort of a problem and which resulted in a downturn in Kerala. So this is the situation as far as demand is concerned.
So taking a cue from this, do you think aspirationally everybody would like to grow double digit, but since things are in control and the festive season will have a strong effect because of the spread between Diwali and Dussehra is longer, do you think second half also we will be able to do a strong double digit volume growth?
So, that's the inclination is to do that. It all depends on how market shapes up. If East and South also starts batting, well, at levels, which is similar to the Diwali belt, then yes, I would say that, there will be a fairly decent growth rate in the quarter 3, of this year.
Yeah, the reason why I'm asking, because our quarter 3 last year growth was only 7%. So I think the base is favorable. Quarter 4 we have inched up from 7% to 14% growth. So that's what I'm saying. Even if you maintain this kind of run rate in a weaker demand situation, the demand is stronger, you will be able to maintain a higher strong growth.
That is right. So that's what our expectation is. I only hope and wish that, some of the Kerala or the southern markets picks up momentum, in November and December.
Okay. All right. Thank you and all the best.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Atharva Buttada from Purnartha. Please go ahead.
Yeah, so I had just one question. In quarter four, how do you think the demand will shape up? Because we are having a long festive season in quarter three. So do you think that there will be single-digit demand coming in quarter four? Yeah,
So that's a very difficult question to answer at this stage. Frankly speaking, I don't think quarter three is going to impact quarter four in any big any in a significant way, because the main seasonal month was October, and part of November. So it's not that as if December is going to peak and therefore it might impact quarter four. So quarter four on a standalone basis, whatever is whatever way the demand flows at that point of time, based on that our growth rates will come. But going by what we have been doing so far, I think we should have a much stronger growth rate in Q3. That much we can predict compared to Q2. But what will happen in Q4, only time will say. But we expect that the demand should stay at these type of levels, and we should have a decent quarter in Q4 as well.
Okay, thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and one to ask a question. The next question is from the line of Varadarajan. Please go ahead.
Good evening. I just wanted to understand what has been the growth in the distribution network with respect to the previous quarter and compared to last year, and how are we trying to see that we have a reasonable growth considering the competition intensity increasing?
Yeah, so as I mentioned, we had added about 1,700 color-bank machines in Q2 of this year, and about 2,000 retail touch points, which is a fairly strong number addition which has happened in this quarter. And we expect that in quarter three also we will add a similar number of machines and retail touch points. So thereby, it is going to help us this year and also going forward in the coming year. Competitive intensity is always going to be there, and it has always been there in the paint industry. Many players have come in, but we need to be focused on our approach. We should continue to grow, and we have to figure out ways and means of achieving our growth rate, and that's something which we are continuously working on, and we are reasonably confident that our growth rates will continue.
Just for understanding, how big is the paint distribution network compared to cement distribution network, especially with Birla coming on paints and having their cement distribution network?
So this is not a very pertinent way of looking at it, because the cement distribution network, all of them are not going to convert into paint distribution network. Only a small fraction of it will convert and succeed in selling paint. It's not like that, you can, all the paint dealers will suddenly become cement dealers or vice versa. It doesn't happen like that. So therefore, I don't know what the cement distribution network size is, but we have operated, as you would have heard earlier, that we were a partner with Berger in the UltraTech Business Solutions store, which was a cement network. And I don't think that network is very conducive for paint selling.
Okay. Just a last question. How is the ROA for a distributor?
What?
Return on investment for a distributor?
So that varies, from distributor to distributor, at what price point he is selling, what is the mix of products that he is selling. You can't have a fixed number there. It varies from, one person to another person. It can vary anywhere between 15%, per annum to maybe even 40-45% per annum. So it depends on the type of products that they are selling and, what he is doing. Is he, more into premium luxury product type of, or is he selling completely commodity products? At what price he is selling, which part of the geography he is present in. So it has many factors. I don't think we can put one number to it.
Okay. Thank you.
Thank you. The next question is from the line of Ajay Thakur from Anand Rathi. Please go ahead.
Hi, sir. Thanks for taking my question. I had one question on the raw material side. With the current crude oil prices, and can you just throw some light on how the the crude link derivatives are behaving, and also what could be the impact of the same in the coming quarters?
Yeah, so as I mentioned earlier, the prices had gone up a little bit, especially in the solvent side. But again, there's some correction which has happened in day before yesterday, downward. So it is nearly back again to the earlier levels as far as solvents are concerned. Some of the other raw materials are stable. There has been no major change in terms of the prices. But there has been, a depreciation of the rupee versus the dollar. To some extent, that will impact a little bit in terms of the gross margin.
Okay, thanks.
Thank you. The next question is from the line of Archana Menon from Morgan Stanley. Please go ahead.
Hi, sir. Thank you for the opportunity. So two questions on the capacity side. So how much do you think will your 12 lakh odd capacity increase to, including the brownfield capacity as well? Addition. That was the first question. And the second part of the question is, how is your capacity currently split between north, south, east, and west?
Right. So we are currently pretty balanced as far as the north, south, east, west is concerned. There was a lack of capacity in the north earlier, which we put up the Kandila unit, which is operating at around 48-50% level as of now on a 2-shift basis, which can be therefore scaled up to higher levels. So we are quite comfortable as far as capacity is concerned. Most of our factories are operating at about 80% odd level, and except for this factory, which is operating at a lower level. So as of now, we are quite comfortable. The brownfield expansion will be, not very capital intensive, and but the capacity can go up, quite a bit. It should be enough for us to last for at least 2 years going forward. And then, as I said, a year from now, we will start planning for the Orissa plant, which will be a very big plant. That is a time when we will have to, and that will be phased out into 2 years of construction and setting up of the plant. And we will add up approximately another 30,000 to 35,000 metric ton per month capacity once the Orissa plant is set up fully.
Got it. Thank you so much.
Thank you very much. As there are no further questions, I would like to hand over the conference over to the management for the closing comments. Please go ahead, sir.
Thank you. Thank you all for coming and attending to this conference call. Wish you all a very happy Diwali in advance and a great festive season. Thank you once again.
Thank you. On behalf of SMIFS Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.